the CPI numbers, obviously, huge deal. We've actually got a little bit of kind of what looks like maybe a pre-market anticipatory rally, and that the QQQ is up to 1.39. I think that's quite interesting that we're seeing a little bit of sort of this pre-market push before the CPI even comes out. I mean, you got the Dow up 0.86, you got the S&P up 1.08, NASDAQ, as I said. You've got oil and Brent both up about 3.5% right now, 103.4 and 105.9. So we're definitely back over 100. At the same time, 10-year Treasury sitting nicely at that 2.95 level, just wanting to really be under that 3%. It does seem like you get a lot of folks who buy the 10-year bond when it's at 3%, or just bonds in general when they're at 3%. They think that's sort of the ceiling in terms of how high yields should really go. And so as more people buy bonds, what happens? The prices of the bonds goes up, and therefore the new yield goes down. So pretty common there. We've got U.S. Terra Luna and its stablecoin peg is a complete disaster. You've got basically a crisis over here. And this is now the second time that I've personally seen algorithmic stablecoins just absolutely lose their peg. So the algorithmic stablecoins really don't work because if the underlying currency falls in value, then you have to just essentially continue to print more and more and more. It's a disaster. But anyway, we can talk about that at a separate time. Right now, we got to focus on inflation, which comes out in about 4 minutes. Hopefully, I'll be able to get this recorder on. Now, what's interesting is we had an actual mortgage, we got some mortgage application numbers as well this morning. Mortgage applications to purchase a home rose 5% compared to the previous week. Now, the previous week was like a disaster. That's when we had like a 70% decline in mortgage applications. So keep in mind when you're looking at these sort of like week over week ones, it's kind of funny. I prefer looking at the year over year. And so refinance applications dropped 72% year over year. And I'm trying to find out for purchases where we are year over year, because I always think that's quite interesting. In fact, let's just go on the terminal and see if we can find it here. We have 3 minutes until the CPI release. Obviously, it's a big deal. We want to hit expectations. I cannot believe this is not loading today. We want to hit expectations because we want the forecasters to regain some credibility, but we also this is shocking. We also want we want to miss to the downside. The worst thing possible would be a miss to the upside. It would just be doubly bad, right? Because then we're sending signals that our forecasters still don't know what the hell is going on, and inflation's bad. So, all right, come on. Yeah, all right. So anyway, mortgage applications, 2%. Oh, yeah, okay. I wish I could get into that a little bit more detail. All right, well, I'll figure it out for the year-over-year number, and then we'll circle back to that. Mortgage applications to purchase a home rose, yeah, that's 5%. Demand was still, 8% lower than the same week a year ago, but the annual drop is shrinking a little bit because we're moving up. Okay, there we go. There's the number I was looking for. So, it'll be quite interesting to see how the real estate market moves. And everybody's going for adjustable rate mortgages now. Adjustable rate mortgages surged to 14-year high. Oh, that's fascinating. All right, 90 seconds now about for the CPI numbers. I'm very much hoping that the next time I turn this stupid thing on, it works. But oh well, if it doesn't, it doesn't. We'll just have to YOLO it like handheld. We'll still get the same info out. Okay, so big deal. Obviously, remember the numbers that we are expecting. Let me actually just go ahead and grab those. We're expecting off memory 8.1% headline. Beyond 8.1% headline, we want 0.4% for that core month over month and 0.2% for month over month. Yep, those are still the numbers. We are now 1 minute away. Oh, is it coming? No? It's funny, I sometimes I see it pop up. It's just broken. Oh, yes? Dude, that would be the perfect timing if we can get this up. Come on. You can do it. 30 seconds to go. Oh, yes. We got it. Okay, stand by. It's the perfect time right before the release. Okay, here we go. we go. We made it. Okay, CPI numbers come out like right now, so it's perfect. I'll obviously get the sheet up as well, but boom. Okay, CPI, yes, lower. Core came in higher. Damn it, that's not good. We missed to the upside on core. Year over year came in higher, 8.3. That's a miss to the upside. This is terrible. Miss to the upside on core, 0.6% instead of 0.4. No, never mind. And then also CPI month over month for the headline came in at 0.3. Also, all of them missed slightly to the upside. That's not what we wanted. Okay, we'll have to go through the report and see what happened. The Nasdaq just gave up all of its gains, like free market. Whatever it had, that full 1.5 or whatever percent that it was up, evaporated, just absolutely gone. So wow, that's a bummer. I wonder what happened. We did not get a miss to the we did not get a miss to the downside. We got a miss to the upside. Worst case scenario. And let's go ahead and actually go through the full release. It looks like the headline here is blaming potentially air travel, which is part of core. And we've seen a lot more travel, which to some degree is like beneficial for that consumer demand. But this sucks. So here we go. Consumer prices increased 0.3%. Again, that beat 1/10 to the upside. That's not good. Let's see here. Over the last 12 months, we had 8.3%. Again, we were expecting 8.2. This is within tolerance though, right? So it's not like it's so far off. I think what was really the burn was this right here. Nobody was really expecting. I mean, almost all of the forecasts were either 0.4 or 0.5. And so to get 0.6 on that core, that sucks. That right there is the nail in the coffin for some more 50 BP hikes. And so it's not horrible. The good news is, it missed forecasts. Good news is it's obviously down from the month prior. So remember, this number right here prior was hold on, right here. This was 1.2% in the prior. Your core CPI last month, though, ironically, was 0.3%. Yeah, there it says right there, following at 0.3%. Oh yeah, and they even reiterate that 1.2 right there. There you go. Okay, so what was the driver? Shelter, airline fares, new vehicles, index for medical care, recreation, household furnishings, operations all increased in April. Index for apparel, communication, used cars declined over the month. So this is good right here. Apparel, communication, used cars, and trucks declined, but unfortunately you had these gains over here that clearly offset that. This is your 1 month for urban consumers. So it kind of just shows you that this is one of the lowest months of increases, but obviously still a surprise slightly to the upside. This is really what we're hoping, is that this is the peak, right? And it kind of feels that way, right? We're getting sort of this. Remember the summer of last year? This was the original COVID peak right here. And then you got the summer of last year where you actually started seeing inflation go down. Had it not been for Delta right here, we would have probably kept going. Okay, so where were our crazy increases here? Not ideal. See, you can see here that those energy costs coming down right here. Lots of negatives here on gasoline, energy commodities. You've got used cars, apparel right here. Here are some of your negatives. Where are the big increases? Nasdaq's roughly flat right now, so I guess it beats like just plummeting. Again, it's a reduction from last year. It's just not as good as expected. Food index increased 0.9%, but this is outside of core. 5 of 6 major grocery store groups indices increased over the month. Okay, let's get to some of these tables. Let's see if we can get a little bit more. Here we go. Okay, so here's everything. And if we look at this column right here, we'll get the best look about the month over month in terms of what really moved here. And I'm going to try to get out of food. Although look at eggs. My gosh, 10.3% month over month in egg prices. I mean, it's just insane. There's still so many pressures that, look at that. Margarine up 7.1%. Some crazy high numbers. The year over year numbers are quite wild as well. Okay, so what went up over here? Window coverings got more expensive by 4.7% month over month. You had declines, look at that, and durables again right here, right? So laundry equipment, this is kind of like your Whirlpool stock, be aware. Indoor flowers down 4.2%. A lot of good that does us. Men's and boys apparel down slightly. Women's apparel down slightly. So you're starting to see a lot more negatives here. Jewelry down. Toddler apparel down. Okay, got it. Motor oil up, though. What we got over here? We've got newspapers, magazines, 2.7. Boring. What's this? Sewing machines and fabric supplies, 4.6%. Smartphones, 4.3% to the downside. In addition to hardware and computers, this is maybe your chipset area over here, starting to see some disinflation, or actually in this case, deflation. Housing, rent of primary residence coming in at 0.5 month over month. So it wasn't really rent that pushed this. Right here, this is probably what it was. Look at that, hotels. That's crazy, 3.4% on hotels. Oh, this is not good. Domestic services down 1.2%. Where's the travel section? Here we go. Let's see here. Car and truck rental, 2.4%. Transportation services, 3.3%. That's a lot. Oh my gosh, look at that. Public transportation and airline fares. This is your miss right here. 21.9%. No way. Holy smokes. So airline fares went up 21.9% in a month. Wow. That's just ridiculous. Yeah, that's a problem. NASDAQ now down about 0.5%. You got Tesla down about 1.25%. Unity down 26. Coinbase down 17. And then, of course, you've got the Luna disaster. Okay, wow. Geez. Let's see here. So that's clearly an issue, the airline fares, which I wonder how much of that is just related to fuel prices. If they don't parse out fuel prices, is it possible that airline fares, and I got to look at the weight for this, but is it possible that airline fares alone ruined the core and the headline? I'm going to guess the answer to that is yes. Which then, if you parse it out, it's actually not as terrible. Okay, we need to get the weights now. Let's see here. Weights. Where's the weights chart? I'll find it. I might just type it in. Weights. No, that does me no good. All right. To Google. CPI weights. Relative importance and weights. Okay, good. So that's a big deal. Okay, airline. Okay, airline fares. It's actually not that much. It's about 0.5%. Really? Hold on. Used cars. Yeah, because new and used vehicles are 9.2%. So airlines make up about 0.5% of a weight. It's the correct number is actually 0.481. So let's try to understand this. If I go here and I multiply that, essentially that's a weight of, this is 1%, so we have to go 0.00481. And if I multiply, it's such a huge number, 21.9 times 0.00481. I only get there it is. Maybe, because you get 0.1%. There's the 0.1% movement. That literally alone, the airlines, I don't know that anybody would have expected to see that kind of move in airlines. Because look, if we had a normal movement like we did last month it was, last month it was high as well. No, that's year over year. I'm sorry. No. Year over year. Yeah. Year over year, 33%. Last month it was actually, it was 18%. It's a lot. Yeah. Look at these months right here. 5% in January, 10% in February, 18.6% in March, and 21.9% over here in April. That's just getting worse. That's a terrible trajectory. Anyway, that's going to be my guess as to what the big problem here is, as to why we kind of missed on everything by about 0.1. Because I mean, otherwise, there's nothing else that's really super scary here. But that's just the way CPI works. Is you could get one thing that just destroys everything. Oh, they updated the relative importance. Oh, see right here. That's interesting. Look at this. I must have grabbed an old table. So it's actually 0.543. Oh, well, that's interesting. 543. So that's a little higher than expected. Okay, 0.543. Yeah, that brings you to almost 1.2. That, to me, makes sense. Because it's not like we had, used cars and trucks. Truck rental, 2.4%. It's still a lot. Where are used? Used cars. New cars, 1.4%. Used cars, negative 0.6, right? So overall, going in the right direction. However, airlines here screwed us. Yeah. So let me see what else I'm going to look quickly to see what they have, what the suits are saying. NASDAQ's now down 1%. Okay, suit. Okay, airline fare. Okay, yeah, there we go. And I'm going to see what they say about there. Okay. And sorry, 1 second here. There we go. Okay, so what do they say? So another scare to the upside for inflation surprises in April as 2021 experience kind of repeats itself. While the miss on headline was modest, more troubling was the miss on core, which came in at 0.6 versus 0.4 expected. Clearly, the Fed's work is not close to done, and it is little surprise to see equities plunge as a result. Well, yeah, duh. Shelter prices at 0.5. They're actually not yet talking about. I don't think anybody's actually had time yet to go through the sheets like we did. Let me see this suit section. A couple places I look. Okay, here's a little bit more information. The rotation from goods and services seemed evident in this data. Shelter continues to be a growing contribution of year-over-year CPI. Well, it's consistently at 0.5, but that's interesting how they're saying it's contributing more. See, that's an interesting way to look at it because really that's what you're saying is like, even though it's kind of stable at that 0.5% month over month, everything else might kind of be going down around it, and that's what's potentially holding it. The rotation of goods and services seems evident. The takeaway today. Okay. So some of the suits are now kind of suggesting this might be sort of like an inflation plateau, which is not what we want because the Fed's like, no, we gotta fight this down. So that's not good. Okay, and I got some tables here that I can share as well. I think these will be kind of interesting. They just help visualize it. Yeah, okay. Well, they nailed the same thing with the airline. All right. So I'm not the only one seeing the airline move. Okay, so biggest increases that we saw, we already saw some of these. Those were things like airline, public transportation, eggs, margarine, motor fuels, window coverings. Kind of saw those. Grab that though. And then largest declines. Yeah, largest declines were gas, admission to sporting goods, motor fuel, energy, education, TVs, personal computers, peripherals. Policy-sensitive treasury yields reprice sharply higher as CPI leaves the Fed, very much in tightening mode. Let's take a look at how the bond market's responding to this as well. That's going to be really, I wouldn't be surprised to see inflation expectations pop a little bit. Yeah, all gains that were on the indices are gone. The 10-year treasury now back to 3%. And if I go to 10-2 and then look at break evens, let's see how the bond market's reacting. Because obviously they were not perfectly correct with this miss. Yeah, okay, 5-year break evens ticking back up. Still, and the yield curve just flattened a little bit, so about 30.5 basis points on the yield curve, and 5-year break even back up. I'm going to pull up these pictures and show them in just a sec. Yeah, it's a disaster. If had it not been for airline, we would have at least met. That the airlines, that was a big L. At least then we would have met the expectations, right? Hold on a second. Let me get these screenshots properly organized here to where I can, there we go. Okay, so these are going to be some interesting charts for you to see. All right, let's see. You know what? I'll kind of do a recap for those of you just now joining as well. So we'll do a kind of a full recap. That way you'll see this best. Ugh, it's gonna be nasty. All right. Well, there you have CPI. Okay, let's do a recap. Oh man, nobody wants this. All right, there we go. We'll kind of do it like it's a separate bid. Hey everyone, me Kevin here. Okay, so here's exactly what happened with CPI and why we had a miss. The expectation was that we were going to have year-over-year inflation come down from 8.5% to 8.1%. We got 8.3%. So it's in the right direction, suggesting that inflation might be peaking, but the real hope was that inflation would come down to at least 8.1, if not even more, so that way we could clearly define a peak. Even though we're kind of like making that turn and we're rotating down, the concern now is that, well, crap, what if we're going to sort of plateau at higher levels? Now, at first read, I was a little nervous, and I only started feeling a little bit better when I actually looked at the details of the numbers, and those are what we're going to go through in just a moment with some charts. Month over month, headline inflation was expected to move up 0.2%. And we ended up getting 0.3%, and core inflation was expected to move up 0.4%. That's because as food and energy comes down, the other core sectors were expected to sort of come down to the effect where when we take out food and energy, we'd have the larger increase on the headline numbers for month over month. But when we look at core, we thought we would, by not removing these sort of negative hits to gasoline and food, we would end up seeing not as great of an improvement in month over month core. So we were expecting 0.4, but we got 0.6. So we missed on headline year over year by 0.1, the headline month over month by 0.1, and core by 0.2. That's the bad one, though, because that's the one the Federal Reserve told us, hey, we want core to go down. And it went down from last month. Last month, we had a 1.2% gain, right? That was insane. That was potentially a peak, but still 0.6%, pretty hot because 0.6% means core inflation is still moving at 7.2%. That's sort of the speed that we're going at. That's called the annualized rate. And so when I looked at the actual CPI report, we could see this is sort of the reflection of what it looks like when we see CPI starting to rotate down. We were hoping again to have more of a rotation down, and we really got kicked in the butt right here with this core number, which is this section right here. That really kicked us in the butt. And there's a particular reason that I believe core came in so high. And it actually, remember, and this is the weird thing, okay? Core is supposed to strip out. It's supposed to be minus energy and food. Now, energy and food includes gas, right? But here's the problem. Part of core is actually airline and public transportation. Both of these price their fares based on how expensive gas and energy is. And we know that Brent crude and WTI crude are still above $100 a barrel each. And that leads to some expensive gas prices, obviously off the peak. But take a look at some of the gains we've had here on airline prices. In January, we had 5.2% increases in airline prices. In February, 10.7%, and in March, 18.6%. You'd think that may have peaked, but because we're also at the same time as we have relatively high gas prices, seeing a surge in demand, what did we end up getting? We got 21.9% of an increase in airline ticket prices. Public transportation went up 14.4%, which is right above it. Look at these two numbers right here. If we just take the weight of airline prices, which is taking this weight right here, the relative importance rate of about 0.5%, multiplying that by the increase, we can explain about 0.12% of the miss solely from airlines. If we then include public transportation by going 0.00836, which is the weight, multiplying it by 14.4, we get another 1.2%. So you're literally getting, or 0.12 in this case, you're getting a combined 0.24 increase to core solely because of airlines and public transportation. Now, when we take a look at visualizing some of the changes here, look at this. This right here tells you how much rent contributes to inflation that we're seeing. And it's been consistently coming in at about 0.5% month over month, but it's becoming more of that stabilizing force in CPI that's actually keeping inflation hot, in the fact that while rent is still going up 0.5%, other things are coming down, so this is carrying more weight. So that's something to keep an eye on. And then here are your leading decliners. So these are things that went down in price from the last month. And so we can see admission to sporting goods down here, gasoline down about 6.44%, motor fuel down 5.81%, energy commodities, laundry equipment, information technology. These are things that came down. Look at this one. Televisions came down, apparel like women's suits, men's apparel, jewelry, personal computers, and peripherals. These are things that came down somewhere to anywhere between 8% and 2% month over month. 2% decline in computers, by the way, month over month, that's actually a pretty good move, because that's somewhere around, if we do 2 times 12 to annualize that, that's like a 24% year over year decline when you get a 2% decline month over month on computers. So you kind of see some of that weakness potentially in the chips. You know, that makes me sort of think of like Corsair. It makes me think, you know, when we see washing machines, laundry equipment, I think of Whirlpool, I think of NVIDIA, you know, not so much looking at potentially apparel, although you have a big apparel section within Target, and then apparel stores themselves, whether that's Nordstrom or whatever else. Going to the upside, you really see that disaster here in airline fares, public transportation, eggs, margarine, window coverings, sewing machines, milk, transportation services. So again, the more we look at things like here, transportation services, airline fare, public transportation. This is interesting. I want to actually see what the weight here is for transportation services. I think that's the category right here, though. Yeah, it is. It is. Look at that. This category moved 3.3% as a full category here. But I prefer to just look at these right here because these are sort of, they give us a little bit more detail. They really tell us that this inflation read, again, missed probably by about 2.4%. Well, I should say, like, it makes more sense to look at it like this, 0.24, there we go, percent, solely because of these two things here. Now, personally, I actually don't think that's as scary. However, the market's going to hate this, right? The Nasdaq's selling off. We've got the 10-2 spread down. The 10-2 spread is now, I'll show you a screenshot here. 10-2, which is our yield curve. Remember, 0 means an inverted yield curve. Take a look at this right here. We were actually steepening nicely. We're at 30 basis points right now, which is still higher than where we have been since essentially March, which was a disaster. April 1st, when we had our inversion of the yield curve. This was really the beginning of the stock market sell-off we've had the last 5 or 6 weeks here now. But we've come down, not down as much as we were, which is good, but 10-year yields back to over 3%. And if we look at the break-evens, take me a second to get it here. I get the break-evens up. 5-year break-even, which is sort of the bond market's expectation of inflation. Here we go. We get the following chart. We can see that we've really been seeing this nice decline here in inflation. This is really, really good in the market's expectations for inflation. Really, really good to see this, but really bad, obviously, that now we're getting that pushback to the upside. It's just breaking that trend of a falling break-even expectation, which it happens. We get these little breaks to the upside. Hopefully, it ends up being transitory, but that missing course sucks. And unfortunately, the Federal Reserve can't just look at this and say, oh, well, it was just airlines, no big deal. Well, it actually is a big deal because, you've got a situation where the Federal Reserve has to see, okay, well, this crazy airline spending clearly means that airlines have pricing power. And if airlines have pricing power, it means the consumer's still spending like crazy. And it just solidifies the fact that we need continued 50 basis point hikes, which really sucks. Now, if you jump on over to the actual QQQ here, you can see this essential disaster happening here. The Nasdaq now down 1.85%. You actually see a less of a degree of pain in Tesla than you ordinarily would. Tesla usually has a beta of 2 to the Nasdaq, which would mean we would expect Tesla right now to be down about 3.6%. It's down about 2.3%. So you're actually seeing less of pain here. And I'm not exactly sure why, but that's what the market's doing, sitting at about 782 right now. NASDAQ, a 1.59%. My suspicion is, reads like this are probably going to almost with certainty push us into recession in Q2 here. And we're going to look back at this time, which we won't actually know, probably, my guess, until, let's see, the second quarter ends April, May, June, probably late July, early August, we'll have the next GDP data. And that GDP data is going to tell us, potentially that we're in a recession, and which we could be the entire year. Now, it's also worth noting that tomorrow we have PPI numbers that are coming out. PPI final demand is expected to come in month over month at 0.5%, down from 1.4. The core is expected to be 0.6. And I mean, if we get a miss here as well to the upside, it's not going to end the pain for the stock market anytime soon. So I do think this puts, essentially cold water on hopes for a short-term rally here. Kind of disappointing. And all thanks really there to airlines, which really good measure though of consumers, right? So here's your report. You could thank consumers for traveling. Speaking of which, I have a flight today. Yeah, flying to Florida. Got to go to Tampa. Then I got to fly to Miami. Then after that, I got to fly to Florence, Italy. So there won't be a market closing live stream today because, I'm flying around. Sorry, I guess that means I'm contributing to inflation, which contributing to inflation, I guess maybe I'm also hurting with that by reminding you that we're going to have the largest price increase ever on the programs on building your long-term wealth, linked down below. This probably feels quite insensitive to be talking about this in the CPI report. So I'm just going to kind of slowly back away from that one. Anyway. Okay. Yikes. Let's do a little bit of chat now about, well, actually, you know what? Let's jump on over to CNBC and kind of see what they're saying about it. Be interesting. We kind of got an idea of what the suits are saying and everything, but let's listen in over here.
Points. The Nasdaq is down by just over 200 points, and you're watching the S&P futures off by about 40. Of course, rates are back up, 10-year rising again on this expectation that the Fed will have to do more, or that inflation will get out of control. Make sure you follow our coverage right here on CNBC all day, and join us back here tomorrow. We'll see you later. Right now, it's time for Squawk on the Street.
Right. Well, that's boring. I was hoping to get a little bit more perspective, but maybe we will when they open up this next section here, since we've done this. Keep in mind, if you have not yet followed me on Twitter, recommend it. You can follow me at RealMeKevin on Twitter. Let's listen to what Jimbo has to say.
300-point gain and then some as April core CPI runs hot, up 0.6. That's double the prior month, even as headline inflation slows to the slowest sequential growth since August of last year. 2-year yield rockets near 2.9. We're going to begin with the market reaction to the April CPI data, Jim. Used cars down month on month, but new cars, as you suspected.
Yeah, Philippo had that yesterday. And I think that there's enough in here to make it so that the Fed keeps pushing. It will turn. I mean, I don't know why people felt that after he only did a certain amount, that would already send the CPI over. And why I do feel that he was wrong to limit and say not 75. I mean, he could come out today and do 75, and there would be a relief rally.
You're not calling for an intermeeting.
No, I wish he would do that, frankly, because I just think that he has to shake things up. You know, we're very close to pushing over a lot of different things, but they have to be pushed over. People have to say, all right, the biggest asset that has gone down is the stock market. It's really hurt people. There's a lot of stocks that we thought would have the ability to survive because they had profitability, and it's turning out not to be the case. It's the weakest part of the U.S. economy is the stock market. And I think that's actually, unfortunately, positive if you're the Fed. It just has to translate into why, you know what, I don't have the money to be able to do it. We have a lot of companies that are falling apart. We have companies that are saying, listen, you know, when people think we're not going bankrupt. I mean, I don't want to see that. But I don't think that we're that far. I just think that we need a couple more Fed tightenings. And then I think that what's going to happen is you're going to say, well, listen, there's a lot of companies that are very profitable. They've come down a lot, and let's buy them. And everything's been junked up by all these ETFs that have been put together, and the greed of Wall Street that has just made it so that you've got the bad with the good. And I think you're going to have to sit back and say, you know what, there are a lot of companies that came public in the last 18 months that are as worthless as the companies that came public during 1990 to 2000. They have a little more cash. But we're seeing so many companies where you look at 23, 24, 25 numbers, and there's really no hope to profitability. And they do have enough cash to get there. They tend to be name brand companies that you look at them and you say, oh, all brands, look how low that is. I got to buy it. Warby Parker, I got to buy it. And then there's nothing. There's like no raison d'etre. I mean, a lot of companies came public that during this period where it was very forgiving. And that period's over.
Yep.
And I liked that. I mean, that period's over. That's one of the principal sources of inflation was that, you know, like $9 trillion worth of equities. And I don't want people to lose money. But I do know that when you look at something like a Coinbase, it's just terrible. But Gary Gensler told you it was terrible. There's a lot of people, Carl, who told you things were terrible. You know, told you that these coins that were stable coins were terrible. And people just ignored it. I mean, I think that Coinbase is just another asset that is chimerical. I mean, we don't need it.
Coinbase.
Well, I mean, like look, Coinbase, they've been belligerent the whole way down. They've been belligerent, angry at their critics, but the critic is the commission. And I said over and over again, you can never criticize the commission. You may hate the commission, but the commission runs. I mean, look, Elon Musk hates the commission, but he's never done the things that Coinbase has done.
There's a look at coin this morning below 55. David, a lot of it's also getting the analysts to admit to their prior mistakes. I mentioned last night Piper in January named coin a top pick with a target of 440. It looks a lot harder to get to now.
Yeah, 440 would be a good distance from here, I think, guys. You know, as you know, I have a keen sense for you.
That is interesting. Jim really liked Coinbase when it IPO'd. I liked it. I liked the fact that I knew they were going to go through this transition of like sort of level 1 revenues to level 2 revenues. But when they got destroyed with not being able to have lending, that killed it. That just absolutely killed them. It sucks. It really sucks for Coinbase. We'll talk a little bit more about crypto as well in just a moment.
that there was a large overreaction to that, as I think you're aware.
Right, but David, look, JP Morgan, the actually literal JP Morgan always said that if you have to defend your credit risk and say that, look, you're not going to get bankrupt, it's over for you. Now, I don't think it's over for Coinbase. I mean, they've got a business, but the business is terrible. I mean, it's a terrible business. And crypto is a terrible business. But if you said that 6 weeks ago, there are enough people who would jump on you that you would just say, you know what, I want to tell the truth about crypto, but David, no one wants to hear it. And now you're looking at these stable coins, and they're anything but stable. And we're all trying to just say, don't worry about that. Well, I mean, I don't have to not worry about that. I can just go buy an oil company. There's a big bifurcation, David, between companies that are going to get there and companies that aren't going to get there, or companies that don't care about getting there. I have Roblox on tonight. And Roblox is a very good company, but they're not trying to get profitable. They have a lot of cash. They want to do a great product. So there's this third way where you have a lot of cash, you have cash flow, you don't have to get profitable. But then there's a lot of other companies, David, that I'm just worried about. And
I want to just jump in here and mention that one of the things that's so important about cash flow is not that you need cash flow all the time, especially in the good times, right? Like when you're making money from hand over fist or whatever, and you're just like, oh, we're just going to take all this money and reinvest it, kind of like Amazon does. It's not that big of a deal if you have a slight, negative cash flow quarter after quarter after quarter as a company, because oftentimes it's just seen as, well, like you're reinvesting into the business, right? The problem is if you go into a recessionary time, that's when you have real problems, because in a recessionary time, you've got to be able to be prepared for unexpected circumstances where you need extra cash flow. And then you go look at your stock, you're like, well, I could always raise money from the capital markets. And then you look at your stock and you're like, oh, wait, never mind. My stock's down, 90% or whatever. How are you going to raise money? And then you create real potential bankruptcy risks. And that's bad. It's really bad. So, Roblox, I mean, my kids are freaking addicted to Roblox. Both of them, like a 4-year-old and a 6-year-old. They play together. It's crazy. My 6-year-old has a walkie-talkie, and he talks to his friend. Hold on, let's listen to this in here.
The thing I hear is they've lost. He's lost. I mean, Coles has won. That they're going to wipe him out, sweep. All their directors are going to get reelected. Not sure what that means, by the way, for...
It's just sort of a Coles update. Anyway, so, yeah. I mean, there's definitely an attraction to Roblox. And what we saw in the earnings yesterday was that their user base actually was stable, right? Like they met expectations for their user base. The problem really is just profitability. We don't want to see negative anymore. Unfortunately, that's kind of all we have been seeing in the market has been red and negative. Matterport, by the way, I will say, really proud of them. They went positive. Awesome. Unfortunately, it's a company that's like, what, $4 now? Let me see here. The market is also slightly recovering. Yeah, I mean, Matterport, it was up 7% last night in after hours. Now it's at 4,280. It's crazy low. So, all right, let's listen to a little bit more of Jimbo's here.
DBBY.
Yeah.
Well, I can't just sit here and say everything's bad. Carl, I'm not going to do that. We have had the bad drive down the good, like some sort of Gresham's law, where you look at situations and you'll see these stocks. I won't even mention their names, but it's like, here's one. I'm not going to mention Singularity Future Tech, but NASDAQ listed company CEO is fugitive on the run for allegedly operating a massive Ponzi scheme. Chinese company, thank you, Nate Hinderberg. I mean, I don't know. Does that say don't buy Western Digital? I mean, well, I have Global Foundries on tonight. They had a really good number.
Yep.
David, I rebel against you. Not everything's grow generation, David.
No,
David.
Not everything is, Jim. You're right.
Not everything's
and there are always
space.
things to potentially buy, and they aren't all oil companies, I wouldn't think. But
No,
take your life in your hands doing it right now. I mean,
Well, I
a lot of
disagree
guys
with
came
that.
in today. A lot of people came in expecting that number was not going to be as hot, and they really thought we were going
It's
to
a
rally. And we
long
saw what
day.
happened with the futures in terms of that reversal.
All
It is
right.
a long.
Let's go ahead and get off their bickering. Let's go ahead and talk a little bit about what's going on with Terra Luna. It's just so many disasters happening right now. It's pretty bad. So I first talked about stable coins back in December 2020 and January of 2021. And I talked about how one of the reasons that I don't stake is because if we end up getting a liquidity crisis, you need to be able to sell. Staking prevents your ability to sell. This is why you get paid, because you take risk, right? Take substantial risk. But beyond that, we don't know how frequently stable coins are collateralized. Now, people like to say, well, banking system, lends money, fractional reserve banking and stuff. Sure. But at least we know how often the money is lent. We don't know how often the cycle in crypto occurs. What we have seen is people could take money like $100 and go on like Binance and leverage this stuff up 20x. That's one person. But then what about all the downline people? How many times leverage do we have in the crypto market? And so we actually see right now Bitcoin down 8.39%. A lot of this right now is being driven by Terra and the stablecoin DPEG that we're seeing, which, okay, let's grab it right here. Terra USD. Look at this. It's down to 32 cents right now. This is what's known as a DPEG. So the way an algorithmic stablecoin works, here, let me try to. I'm trying to think if I should just try to draw this. Yeah, I might do that. I might try to draw this. Okay, let's draw it together, and that'll make a little bit more sense, I think. All right. Okay, so we'll kind of just draw this together. All right. Come on, Mr. iPad. You can do it. Give it 1 second here. There we go. Perfect. Okay. So, yeah, I see somebody making this comment about USDC being digital USD. This is incorrect. It's not. All right, let me explain this a little bit better. There are two main types of stable coins. There's one type of stable coin where somebody, like, let's just use Gemini as an example. The Gemini token uses the dollars that they have in a bank to show that, hey, look, we have $1 for every Gemini that we have created. That's the argument, right? And so the idea would be that if all of a sudden you have, let's say, 100,000 Gemini tokens or USDC or these sorts of dollar-backed stablecoins, right? That's your type 1 stablecoin, your dollar-backed stablecoin. If you have 100,000, let's just say USDC, then you would expect $100,000 of actual cash, which is United States dollar, right, in a bank account somewhere. And generally, when audits are completed, audits will get completed to say, this is correct. There are $100,000 of cash in a bank account somewhere. And you'll even see websites that'll say things like, oh, well, this has FDIC insurance. So that means the cash we have in the bank is actually FDIC insured. This is true. The cash is FDIC insured, but not the stable coin. And so this is where things get entertaining. Now, this is, again, a dollar-backed stable coin. It's important to remember this. What's interesting about these stable coins is that we can now take this USDC, these 100,000, and generally the reason people put money into these is to stake or to get yield. So, for example, if I put $100,000 in and I now have 100,000 USDC, I'm going to get a notification that says, hey, Kevin, you have 100,000 USDC. Why don't you sign up for like Gemini Earn or any kind of our staking programs where you can earn a yield? And let's just say that yield is 8%. Well, that means me as a customer, I'm looking at it going, oh, so you're telling me my 100,000 USDC is backed by cash in your FDIC bank account. That's cool. So this is like cash. But if I just agree to stake it, or in this case, it's really lend it, right? But they make this a little bit more blurry. Usually they'll say have things like programs that are branded as earning or whatever. Like crypto earn is a pretty common one that we see. And it kind of disassociates the idea that you're actually lending the money. But let's be real, you're lending the money in this case. And I don't want to say that staking and lending is exactly the same. They can be very, very different. But in the purposes of stable coins, we're just going to assume you're locking up this 100,000 USDC now, which you think is backed by cash, and now you're going to lend it. Okay, great. So now here's Kevin, okay? Kevin says, okay, lend. So now somebody else comes around and says, hey, I want to earn 8%. Let me go ahead and also deposit $100,000. So we're going to call this P2 or person 2, right? They now deposit $100,000 of cash and get USDC. So now how much money do we have in the system, right? If I write up here, system, we now have $200,000 in the system. But how much USDC do we actually have? 100,000. We still have 100,000 USDC because Kevin lent his USDC. Now, ironically, and this is the problem in the industry, when I open up my app and I look in my app, I go, oh, I have 100,000 USDC. No, I don't. When you look in your wallets, you're like, oh, look, I'm rich. I have 100,000 USDC or whatever sitting in my bank account that's backed by cash. Wrong. It's not. You've lent it. You actually don't have that despite the apps telling you this. And that is a huge transparency failure that a lot of the institutions that handle stablecoin lending don't tell the user. They make it seem like you still have the money because you could go in there. And as long as everything's fine, you could still turn your USDC into another crypto when the system has liquidity, because now they're taking that from someone else, right? They're taking that from somebody else who's now depositing cash and then signing up for lend or whatever, right? The system works when it works. The problem is this layer here could be repeated 100 times. And so let's just be extreme here and say we're now at person, 100. So instead of person 2, we're at person 100. Well, if we're at person 100 and they've all thrown in $100,000 into staking it for USDC, we can, and all of the 100 people go, yes, I want to earn. You could literally have 100,000 USDC and $100,000 backing that USDC. And then you have 100 people who have lent it out. So now you have 100,000 times 100. That's $10 million in the system now. So the system now potentially has $10 million backed by $100,000 of USDC. That's because everybody who's in the line, who's actually holding these stablecoins, is like, of course. Why would I not do that? So somebody here says, somebody's got a question here. So is USDC backed safe if it's not sitting somewhere and not staked in? Look, if you do not turn on the earn and the yield, yes, then you actually have the USDC. And then in theory, it is backed by the audited cash. But as soon as you start getting a yield on your stable coin, you have lent it. And so in this example, when I show you that you could literally take $100,000 and the system could turn that into $10 million. And then what do the people with the $10 million do, or the industry with the $10 million do? They go buy Bitcoin or Ethereum or whatever, and they pump up the crypto ecosystem. If you think about it, it's all great and it works wonderfully while it's going up. But the stablecoin market, because we have no transparency into how often these coins are lent, is really fraught with massive dangers. We don't know if it's fraught with problems. We just know it's fraught with the potential danger that this system could repeat itself 10 times, 100 times, 1,000 times, 10,000 times. And I know people's counter argument here usually is like, oh, but Kevin, banks do this too. Sure, we have fractional reserve banking, but at least banks go through stress tests. At least we have a regulatory body and lending rules and credit and monitoring in terms of who has how much debt. That doesn't mean there aren't failures. I mean, look at Archegos. Archegos was just a small example of how bad lending can get when it's out of control. The guy turned like $1 billion into over $100 billion leveraged, right? And that's because of shady and not transparent practices where when you do swaps in the stock market, you could essentially look and say to a bank, hey, I've got $1 billion here. Let me get $10 billion of risk by making these swap agreements, and then go to different banks and do the same thing. That transparency was missing. And this person found a hole to where when there was no transparency, they could get 100x leverage. That was a very bad problem. And the system was able to sustain those sorts of losses because we don't generally have that sort of insane lending in traditional finance anymore. We did back in the 2008 financial crisis. I'm not a shill for the banks, okay? That was terrible. You had a $10 trillion housing market that was collateralized with credit default swaps all the way up to $100 trillion. That's insane. Unfortunately, in the crypto space, what we're missing is how often are we getting this sort of leverage up? And then who are the borrowers? And if every person with a USDC is essentially a borrower, what are they doing with it? Are they going 20x YOLO on derivatives on crypto, right? And then propping up a Bitcoin to 69,000 or whatever. And when that starts falling and people start getting liquidated, what do we end up getting? We get something like a Terra Luna, which unfortunately, Terra Luna is a different kind of stablecoin. It's an algorithmic stablecoin. Now, I'm going to give a rough outline here because this is not worth going so deep into the weeds because I'm just going to lose folks here. So I'm going to go into a simple explanation here. So the thing about Luna, that's really interesting, is Luna is a cryptocurrency. And rather than using a dollar to back their stable coin, which they call UST, what they actually say is, hey, we're going to back our stable coin with Luna. And the reason it's algorithmic is the following. I'll give you an example. Let's say UST is sitting at $1. Okay, perfect. Well, if it's sitting at $1, then everything's good, right? It's stable. It's at $1. So now you deposit money into UST like you do with the USDC example, and you can get your yield, except because it's an algorithmic stablecoin and it's newer, instead of an 8% yield, they offer you like 19% or something ridiculous. Like, first of all, that should be a big red flag for you, right? So, okay, cool. So people are like, cool, if I lock up my money in UST, I'll get 19%. Holy crap. If I put $1,000 in, that's $190. Like, if I do $10,000, that's $1,900 a month. A year. Like, that's awesome, right? And the more money you put in, it's kind of like, I don't have to work anymore if I'm getting 19% yields, right? So it's very like enticing. And so what happens though is UST is traded. And usually with stable coins, they tend to trade fractions of a penny. So for example, if all of a sudden UST goes to 0.995, well, usually what the market does in this case is somebody says, oh, UST or whatever it is has fallen below $1. I'm going to buy it. And this is called arbitrage. This is the market's version of arbitrage. And I'll get to sort of the algorithmic part. The market usually comes in on like a USDC and says, oh, it's at 0.995. I'll buy it. Buying increases the price, ideally back to $1. Sometimes we overshoot though, and we go like 0.005. What do you do then? You sell. And then you basically set computer programs on both sides that buy and sell, and that's currency arbitrage. It's like it should be at $1. I'll just buy and sell. If it's over, I'll sell. If it's under, I'll buy. And then you take those little fractions of pennies of a profit, doing that with $50 million or whatever, you actually start making some money and some profit. By having arbitrage arbitrageurs, I don't know if that's a word, people who do arbitrage, you actually create a marketplace, right? You maintain that $1. Now, with an algorithmic stablecoin, this is supposed to be done automatically by using the underlying currency that it's pegged to essentially print more of that currency or to sell that currency as needed. So, for example, if we get UST and it falls to 0.995, well, we could automatically generate more Luna, use that additional supply of Luna to then go purchase UST. And if we shoot above and we go to 1.005, let's say, well, we can now destroy Luna and ultimately, well, sorry, let me rephrase this. You would sell UST and then you would destroy the Luna. So this is the thesis that you can now, rather than relying on market arbitrageurs, I might be making that word up, you could rely on an algorithm to just manipulate the underlying token. Okay, fine. So now you understand the rough mechanics of this. So why all of a sudden is Terra Luna crashing, right? You go to CoinMarketCap, and what happened here? CoinMarketCap says Terra USD is sitting at 40 cents right now. That's terrible, right? It's supposed to be at $1. Why is that happening? Well, it's happening because look at Terra. It is down 97%. 97%. Look at this in the 3-month history. Terra Luna was trading for $80 to $100. It's basically gone to zero. Okay, great. Well, if a coin goes to zero and a stable coin sits on top of that, like this, so what happens? Okay, well, watch this. You're at $1 for UST, right? Now all of a sudden you depeg for whatever reason. And the algorithm's like, oh crap, we're at 98 cents. What do? We buy UST, right? Well, the algorithm does that, not market arbitrageurs. So Luna creates Luna, which when you create more, what do? You lower the price of Luna, but you use this created Luna to go buy more UST to try to drive it back up to $1. The problem is, the more you keep going back to the well of Luna over here, the more you keep going over there, going, please, give me more, the more you end up devaluing Luna to try to prop up the peg. And here's where the real problem comes in. It's when people lose faith and they say, F it, I'm going to take my UST and I'm going to sell it. I don't believe it's worth $1 anymore. I'm going to sell UST. And I'll even sell the underlying currency Luna. So now your well is getting massive selling pressure because people are fearful. Your stable coin, if you're not locked up, you've got massive selling pressure because people are fearful. They're like, look, if I could just get 80 cents back on my dollar, it's fine. Like, I just want out. I don't trust this anymore. The system's broken. The algorithm failed. Well, just get me out. So now you get selling pressure in addition to an algorithm that says create more Luna when the peg breaks. And so literally you crush the value of the underlying token. That is what an algorithmic stablecoin is. That is why Terra Luna is a complete disaster. And this is now the second time that I have covered an algorithmic stablecoin crashing like this. If you go to my channel, Meet Crypto, I think one of the recent videos that I posted there is the $600 million rug pull. And it is the stablecoin Ponzi waves/neutrino depeg and collapse. Now it just happened to happen with not a small coin, but a substantially larger coin, Terra Luna. This same thing, by the way, mind you, could happen in the regular stablecoin market if arbitrageurs start saying, no, I don't trust the USDC peg anymore because I think there's too much leverage. So you could actually see this disaster happen with a loss of trust in dollar-backed stablecoins as well because of that leverage example I gave you. But that generally takes crypto prices falling substantially. And the good news regarding that part is Bitcoin's only down 6% today and only down 23% in 7 days. And in order for us to see like a US, and I know that's not really good news, I'm being a little facetious there, but if you really want to see a real stable coin get depegged, when Bitcoin falls 50% in a day, you're going to start seeing the real stable coins depeg as well. It's scary. Anyway, that explains what's going on with Terra Luna and all the madness. Let's now get to something else. The market.
EBITDA was a miss, but DAUs were in line and bookings were in line.
Right. I mean, look, I would have liked bookings to be a little bit better because he says that's a major indicator of how they're doing. That's the little things that people buy. But you know what? If you have a long-term, if you have a Kathy Wood view, Roblox, he should be buying Roblox. He should be. Not TM. TM.
Here's a look at the opening bell. And Brett, at the big board today, it is Genuine Parts Company, distributor of automotive replacement parts at the NASDAQ. Singen, a autonomous vehicle technology company, Jim. As
Well, what would you rather have? There it is, Genuine Parts or the other one? I mean, Genuine Parts is a real good company. Their yield's 2.7. They could easily do a split off. It's 16 times earnings. They make things. They give money back. And that's a real company. I like Genuine Parts. I've liked it for a long time. It's a really good company. But should it be polluted by toast? I mean, am I supposed to do that? No, I'm not.
He's always been bashing on toast here recently. So Dow Jones down now 0.07%, S&P down 0.33%, NASDAQ down 0.83%. It's actually not horrible. I mean, it's painful. And the market open is definitely getting some red bars here. We're down about 1.3. Oh, come on. Stupid laptop here. Down about we'll get that back up. There we go. Down about 1. Tesla now actually moving up here a little bit. Here we go. Now down about 1%. Yeah, kind of bouncing around here. We'll see what happens. Coinbase down 25%. Geez. Rocket down 6%. Crazy. Let's listen to Jim here for another minute here, and then I'll come back.
Last week at Milken about it because both of them had invested in that. Both of them invested in, what was it, the convert or preferred? But
they had a good bond there. Excellent opportunity
to provide financing for the company. I think it was more. It was over a double-digit coupon on that thing. But yeah, I guess all right. You're right. Why not mention a stock that's down to 85% year to date? That's the amazing thing, Jim and Carl, is that that's not alone. You can find quite a few other names that are down perhaps as much as 80%. And so, Jim, are they just done again is the question, or is this a point at which you have to sort of get brave and say, you know what, this is not a business that's going away?
Right. You raise a great question, David. I remember I was short a company called Merry-Go-Round, MGRE, which was an apparel company, and they had minus 30 same-store sales. And Grow Generation, which is a company I checked.
All right, I'm going to pull off this. So, okay. Terra Luna disaster is a disaster. It does look like we've got some BTC recovery here, at least somewhat. Take a look at just sort of the sticks as to where we are here. A quick note: this platform is Webull. If you want to use Webull and get up to 5 totally free stocks, you could do so with by going to metkevin.com/free. And you could get 5 stocks totally for free, 2 for just signing up. If you deposit even just 1 penny to fund your account, they'll give you 3 extra free stocks, which is pretty cool. It's a pretty cool offer that they've got going on right now. All right, let's see where the biggest losers are right here. Okay. All right, so what do we got here? We have Purple Innovation up 27.88%, but still at $3. Man, so I bought this company at $19 during the pandemic, and it ran up to like 30. No, it ran up to like 35, I think. I sold it at 25. And I can't believe it's $4 now. Like it is, this is like been the most depressing environment ever for picking. Now I'm happy I took profits on that, but it's like, if you're picking stocks, you have to be careful on these. I mean, there's so many of them. Like Matterport cost me a lot of money. I was really sad about that. I sold Matterport at like $10, $10.50 or whatever. I'm glad I did because it's at $4 now, but I'm like, come on, man. These are actually good companies, but the market just doesn't care right now. It's so painful, with the exception of Peloton. Now, I made money on Peloton. I lost money on Matterport. Lost money on Affirm too. Peloton, I think I got lucky on because I saw massive red flags of their changes coming. But like, if anything, business is improving for companies like Affirm and Matterport. It's just the way the market is pricing these guys right now is insane. I mean, look at this. Great earnings that beat expectations. Their subscription revenues are blowing up. I was actually really happy to see their subscription revenues move the way they were. $4.30. Nobody cares. It's insane. It's just this market has been quite punishing. Look at that. Unity, 35%. Polkadot, it's obviously crypto here, 24%. Coinbase, 23%. So painful. ARK down another 6%.
Hi, good morning. What time is your hearing, sir? Yes, I can hear you now. What time is your hearing? Okay. Okay, no problem. We're still in session. Give me that's your name? Kyle? Okay. Which is your last name? Kyle. Okay, 1 second. Can you spell it? Can you spell it? CHI? Okay, is MINNI? What else? CI. Okay, let me put you in the breakout room, okay? We're still in session. 1 second. Yeah, just being silent, okay? 1 minute. Here we go.
Red and continues through.
Can you back that up a second?
Sure.
I had to do it a couple of times too.
Okay.
Okay.
Red right there. And
Anything else you want to tell us, ma'am?
Yes. It's my first time going through that intersection, but I went back. That particular yellow light, it doesn't even, you know how some intersections give you a couple of seconds? That does not give you no like seconds. It turns yellow, boom, it goes red.
Can we play that from the beginning, please,
But-
officer?
yes. All right, come on. Come on.
There's yellow. It's yellow a couple of seconds there. And then red. I will tell you that I certainly have no control over how long that light stays yellow, but I will say that they are automated. I believe that's true, and it was yellow for some period of time, ma'am. Is there anything else
Yeah.
you want to tell me?
My intentions was never to take the red light. I don't think that I'm guilty. When it comes to red light, I'm very, very cautious because, red lights, I see it every day. People are taking the red lights, and I actually, sometimes it's about to be green. I stay 10 seconds because it's ridiculous how people are really taking the red lights, and we're in danger of it. But I feel that I'm not guilty. I did not take the red light. I wish they would maybe give it a couple of 10 seconds, but that particular intersection is really fast when it turns red. So I just feel that I'm not guilty.
I understand what you're saying, and I'm not an expert on how many seconds it's supposed to be or how many seconds it was. But when they're automated like that, well, when the light is what the light is, we can't see on the video that it was red when you entered the intersection. So I really don't have much choice here to find you guilty. It's going to be with no points, no school, 277 with a year to pay, ma'am.
Okay, that's fine.
Thank you. Go to
Okay.
MiamiDadeClerk.com. You know that part, right?
I have a quick question for you.
Sure.
If I want to put it in a payment plan, I could do that, or I have to go to the courthouse?
Well, the payment plan is just finish paying within a year.
Oh, okay. All right, I
Okay,
understand.
you can make several payments as long as you finish within a year.
Oh, okay. All right, perfect. All right, thank you, sir.
Okay, thank
Okay.
you.
You're welcome.
Bertha Maya.
I'm here. I go by Betty, my nickname.
I'm sorry, Betty.
It's okay, but it's really Bertha.
Okay, well, that's what I see on the ticket. So
Sure.
Officer, you ready on Miss Maya?
Yes, I am.
Okay, that's your car, ma'am?
Yes, I'm not the driver, but I am the owner of that car.
I'm sorry, say it again?
That I am the owner of that car, but I'm not the driver of the car.
You're not the driver.
No.
You heard what I told the other gentleman about filing an affidavit?
Yes, I did.
Is that something you want to do?
No, let me just see the video. I am not even just here to argue the video, but I'll see it. I am here that I never got even the notice that there was
The notice is sent to the address on the registration.
I understand.
Is that accurate?
It is accurate, but ever since pandemic, I have had a nightmare with my mail to the point that post office had to come to my house and sort this out because they kept my mail. It's been a nightmare, and it's still not right. So the next thing I see is I get a thing for 277, and that was, that's when I went to the courthouse and they told me to do a Zoom. That they would schedule me for a Zoom.
Okay. Officer, I'm looking at her driving record. She's driving since, hold on a second, I just had it. Driving since 1973, and the only infraction on her record is another red light camera back in 2018. So that's just over 4 years ago. I'm going to reduce it down to 158. You're going to plead no contest, ma'am, is that right?
Yes, okay. Yeah, thank you so much, sir. So go to MiamiDadeClerk.com.
MiamiDadeClerk.com. Miami-Dade Clerk, is that what you said, clerk?
Yes, MiamiDadeClerk.com.
MiamiDadeClerk.com, yes, ma'am. Have a great day. You're free to go.
Thank you, you too. Thank you so much.
Serge Medina. Do we have Miss Medina or Mr. Medina here? I got to start getting that right, don't I? You're ready on Mr. Medina, correct?
Yes, I am, sir.
Suspend license, defendant failed to appear. There's a message. Next case belongs to defendant. Okay. Chow Meniti, am I saying that right? Kyle, good morning, sir. You have 2 cases with us today. I can tell you when they're issued. They're both with North Miami Beach. I'll be back. Let me tell you that the first case happened on December 27. The second case happened on January 9th. Officer, did you want to do one-on-one if that's what Mr. Meniti wants to do?
I'm fine with that, sir.
Okay, Mr. Meniti, what I'm talking about is this. If you plead no contest to one ticket and I give you the minimum mandatory fine on that one ticket, the officer will dismiss the second ticket. Is that what you want to do? Or do you want to have trials on both? Okay, on the first ticket, it's going to be no points, no school. Do you need to know the number, officer? And
No, I'm fine with that, sir.
okay. No points, no school, 277. And on the second ticket, it's going to be dismissed. All right, sir. So you go to miami-dade-clerk.com, put in the citation number, and that's how you have a year to get that done, sir. Sure. Oh, yeah, they're still, well, yeah, they are certainly still legal. Some cities are using them, some cities are not, but they are legal for anybody who wants, any city that wants to use them. Some cities choose not to use them, and some cities choose to use them. Sometimes they put a sign out there, but that's not really required. Yeah. All right, sir. Have a great day. You got a year to pay that. Thank you, sir. Emanuela Roland.
Yes, sir.
Yes, ma'am. Last name Roland, officer, R-O-L-A-N-D. Mr. Minetti, you're free to go.
Got it.
Should say leave room or leave meeting. Thank you, sir.